Hi there, traders, and welcome to the Markets in 3 with me, John, Senior Market Analyst here at Anzo Capital. In these live streams, I am here to bring you the latest information in the forex markets, as well as some key charts to watch ahead. So let's go take a look at what we're going into today. And the first thing we're going to be talking about is the pound data that we had recently come out about a couple of hours ago. So what are we looking at in terms of the pound? Well, actually, the British pound has been a fairly strong currency. The market has been very, very bullish of late. And we saw even a very strong commitment of trader report signal recently, suggesting that there would be a strong reversal in the price. And what we looked for was a sort of extreme low to form around about the sort of 19th and 20th of June. And what we saw was price formed a very strong head and shoulders pattern, broke out to the upside. It then came all the way back to the neckline and had another rally to the upside as well. Now, if we have a little look at the currency strength meter as well, I just want to bring it on the screen here. The currency strength meter is showing us that the pound is one of the stronger currencies and is gaining strength. Actually, last week, the weekly change was +6. So out of the G7 currencies, it was the best performing currency of last week. And we've seen that continue rise here in the pound and is now +3 on the currency strength meter. If we go check out the historical currency strength meter and just have a little look at the pound in isolation, we can see that we were very, very weak through the sort of that July period, and that kind of reflected in that downward trend that we saw on pound US dollar. And since then, the price has rallied and pushed much, much higher, showing that strength across the board. If we look at the signals that are coming from the trade signals table at the moment, it's suggesting that we go long pound against the US dollar, long against pound against the Swiss franc, and short against euro pound. So immediately from just that pound strength analysis there is some strong markets to potentially have a little look at. Now, before we dive into those charts, though, I want to take a look at the economic calendar because we've had some data drop for the pound and we have more data coming up tomorrow. So what data did we have today? We had employment data out of the UK today, which is super, super important, right? So what did we have in terms of data? Well, let's look at the unemployment rate first. The unemployment rate actually went higher. It went to 4.9%, which isn't particularly great for the pound, right? So forecasts were we were to see 4.8%. It's technically unchanged because previously it was 4.9% as well. So no real change there. When we take a look at the claimant count change, that has changed significantly. So that was pretty positive for the UK. It reduced to minus 11,000. Now, it's highlighted in red here on the economic calendar because the way economic calendars are coded is a bit wrong, in my opinion. But it's red because it's a lower number than forecasts, right? But essentially, a lower claimant count change is a positive thing because it means that less people are claiming employment benefits. So that's actually a positive. So although the unemployment rate came in lower, unchanged, that's negative. The claimant count coming in as low as it did, that is a good. That's a positive, right? HMRC payrolls change, which is the data given by the HMRC. How trusted that is, who knows? But that stayed unchanged as well at minus 13k. So a bit of a mixed bag for the UK this morning. Now, something that I really like to look at, average hourly earnings. Why do I like to look at that? Because that tells us that people are potentially earning more. If wages go up, that could have a strong impact on inflation. So employment change, average hourly earnings, excluding bonuses on a 3-month period over the year, up 3.5%. It was forecasted to come in at 3.4%, but it came in at 3.5%. So a little bit of upside there. Employment change, okay, 83,000, not great. So that's a big, big drop. The forecast was expecting 200,000 jobs, but actually came in at 83K. Now, the average hourly earnings, including bonuses, also came in lower at 4.1%. So very, very mixed bag of data coming out of the UK. And there's only really two positive things out of it. The average hourly earnings, excluding the bonus, and the climate count change coming in lower. We're only the two real big positives there. Everything else kind of remained semi-unchanged, right? So really speaking, it's leaning a little bit more to the positive side because the others have not changed. There's no deviation from the plan. Now, if we go to tomorrow, there's some big data coming up for the pound. We have inflation data. We have inflation rate month on month, inflation rate year on year, core inflation rate as well. And we also have the PPI data. Okay, so big day for pound coming tomorrow. Forecasts are suggesting that we're going to see an uptick in inflation. So previously we're at 0.1%. We're expecting 0.3% to come out. Inflation rate year on year is expected to rise to 2.9%. And core inflation rates are expected to remain semi-unchanged. Core inflation rate year on year is expected to fall by 0.1%, but everything else is showing a little bit more upside. Even if you kind of take a look at sort of PPI input month on month is expected to climb to minus 0.5% versus the minus 2% previously, and even PPI output is expected to climb as well. So lots of information here about the pound coming over the next couple of days. So I wanted to focus on it a little bit because the pound has been strong and is getting stronger. So the data is either going to back it up and give it some further strength, or it's going to lead to a bit more of a reversal. So I'm looking at the pound US dollar chart here. And we can see that what's happened recently, this is a 4-hour chart. Price has come up into the swing high that formed on the 16th of July and has retested it, okay, and currently is rejecting it. So at the moment, price is not breaking and holding above previous resistance zones, okay. So what we can see instead is that price is kind of working within a little bit of a channel. So if I draw a sort of channel low from the low on the 31st of July and connect that to the low of the 7th of August, we can expand that out. And if I use another trend line from the 7th of August to the 13th of August, we can expand that out too. Now, price is clearly moving higher. You know, even if I reverse back to a daily chart, we're breaking, we're making high highs, high lows, just in general. You know, overall, though, on a weekly chart, we're in this weekly range. Okay. So when we talked about the reversal on pound back here on the 22nd of June, we were talking about potentially seeing price go all the way to the other side of the range, and all the way the other side of that range is around about that 137 handle, 137.50. So I still feel like this could be on, but we need some data to now give it a little push, right? Give it a little push to the upside. So I'm just going to clone that there, and you can see when I clone that trend line from the August 7th lows through, you can see we have a channel, right? We have a channel that's being formed, okay? Even if I put it onto there, we have this ascending channel, which is being formed. Price is making a rejection of that, coming away from it, going back in, rejecting it. So the next level of support for the pound could be down at that trend line support low, which is around about the 135 handle. That also holds confluence with a 50 moving average on the 4-hour chart. And also when I look left, there's quite a strong level of support at 135. And I always like using psychological levels like 135 and things like that. It's been proven in the past that a lot of traders put their stop losses around whole numbers. So there is a theory that the market is attracted to these levels to find some sort of liquidity, right? So what we could look for is price to come into this kind of 135 handle and potentially act as support, especially if we get a stronger bit of data, right? A break above, obviously, the 135.50 handle will also be a positive for price. And I would expect a retest of the 135.50 before seeing a future continuations. Now, if the data comes out worse and we see a dollar that starts to get a little bit stronger, then a break of that 50 moving average, a break below 135 would be bearish, and we could see a move down to the 134.30. So I do want to add that caveat in there at the moment. So let's go back to some data. So what I want to do is I want to have a little look at the interest rate tracker, because obviously this is how currencies move. They are moving on potential interest rate expectations, right? So the Bank of England at the moment, its current rate is at 3.75%. The next meeting is on September 17th, so a month away. Okay. Now, the likelihood is that we will see a hold. There's a 72.9% chance of a hold, a 27% chance of a hike. Okay. So there is a little bit more of a lean to the hawkish side, right? Hold to hawk side, right? Central bank rhetoric at the moment, pretty neutral. But what if this inflation data comes in hotter? If the inflation data comes in hotter, then there might be a reason for the Bank of England to leave rates higher for longer, potentially even hike interest rates in the future. That would be pretty bullish for the pound. Okay, so I would expect maybe a bit more upside in that case. If, however, we see poor inflation data after we've had a little bit of poor data today in terms of employment rates and things like that, maybe we'll see a little bit more chance that the market is more on the hold side, and the chances of a hike diminish and we see a move lower. That will obviously offer us some opportunities in terms of moves, right? Now, on the currency strength meter, we also had a few charts of interest, right? If I look at the trade signals table, we had obviously pound US dollar long, which we've just gone through. We also have pound Swiss on here as well. So if I go and take a look at pound Swiss, let's just see where price is on that particular market. So pound Swiss has come up into a strong level of resistance. Okay, I'm just going to delete all the drawings off here. We're going to start again. So we're at the 1.1 handle. Again, very nice psychological number. Okay, like I said earlier, psychological numbers matter a lot when it comes to trading. So we're at the 1.1, but the market is generally in an upward trend. We can see we're making higher highs and higher lows here, right? Very strong upward trend. And that trend has been forming since the end of June, really. So where we were looking for that big reversal in pound weakness into pound strength, that's exactly what we had. Now, can that continue? Obviously. But again, let's ask ourselves a question. Do we want to be long here, right, at the 1.1? No, that is a strong resistance level. If we look left, we can see that the market has found support and resistance there in the past. So what do we need to wait for? We need to wait for a pullback. A couple of ways that you can look for a pullback. First one is just look at previous areas of breakout. So I can see around about the 1.0925 handle, the market broke out of this area here, these highs, came back. So essentially what I could look for is price to come back into that level for an opportunity to go long. So when it comes to the WCS method and looking at what's going on in terms of currency strength and weakness, why do I want to be long pound? Well, it's a strong currency at the moment. There's potential for it to be stronger if the inflation data comes out hotter. Do I have the conditions on pound Swiss in particular? Yes, the market is bullish, right? It's making higher highs, higher lows. But do I have the strategy set up yet? No. I need to see price pull back into a discount area before I can start looking for opportunities to the upside. Another way you can do that is by looking at Fibonacci retracement tools. If you go from the swing low to the swing high, we can see the 50% is also around that key level we just discussed, as well as the 38.2, which is just a little bit lower. We can look at it from a market profile point of view, right, or a volume profile point of view. If I put a profile level on, we can see that that's where the larger volume starts to kick in around about that area as well. So multiple different confluences around this point. So I'm going to set an alert around that area to see if price can pull back and continue to the upside. The other market was Euro Pound, right? So it's saying a bit of Euro Pound potential downside. We've had a lot of downside on Euro Pound already, right? Market is just recently broken trend on the 4-hour chart and looks to be kind of coming back to kind of retest this 85.60 area, 0.8560. So there could be some potential downside here as well. One way we could probably look to do this, if we go to the hourly chart here, is look for a bit of a break in the hourly trend, right? Maybe a break of this trend line support, close below that could offer a little bit of downside as well, if we do get that continual kind of break. And if we do continue to break lower, I do still like the 0.8425 as targets on euro pound. But I want to see price kind of break in that direction first before we kind of get anything there. Okay, let's move on to the big story. Obviously, the big story today, I wanted to talk about the FOMC minutes preview. Will the dollar break out and continue to move to the downside, or are we going to stay in this trading range that is kind of developing between the 99.50 lows and the 100 highs? Now, in my opinion, we could just remain balanced this week. There's a lot going on. We have obviously the FOMC meeting minutes, which could go either way. Could be a bit of a, a big event, or it could be a bit of a dud. And I say that because the Fed aren't providing forward guidance anymore. And the only things really that I can think could really shift the narrative for the Fed right now is if we see things like, the 3 dissenters that we had recently, if they were close to actually moving from a hawkish state to a neutral state, that could be pretty bearish for US dollars, because it shows that those dissenters actually thought about maybe not wanting to hike interest rates in that meeting. Obviously, the situation we've had with Federal Reserve pricing as well. In the September meeting, we've gone from nearly, 50 basis points hike being priced in to no hike now. So the dollar at the moment is at a very crucial point. There's no real big events this week apart from the FOMC meeting minutes, right? If I go onto the economic calendar, right, and we'll have a little look at, where is it? Here we go. Let's have a look at this week. And I want to filter just US dollar, right? Apart from the initial jobless claims, PMIs at the end of the week, we haven't really got any big data for the US. So the FOMC meeting minutes is kind of the first big one that we're going to see. Now, if we go and just type in FOMC and just type in news, obviously lots of people reporting about the FOMC preview. Now, if we go into the ING analysis here, this was on the 24th of July, so that's not relevant anymore. But, if we look at the sort of interest rate tracker here, we can see that, they're suggesting that the rhetoric is a little bit more hawkish from the central bank, but we're not seeing that necessarily priced across the board, right? If we go take a look at bond yields at the moment, US 2-year yields have come down since the end of July, start of August. They have been down. The only thing that's been up at the moment is the 10-year yield and the 30-year yield. So the spreads are widening between the 2-year and the 10-year yields. And we're seeing price continue to move up. Now, this could be generally supportive of the US dollar in the short term. And the reason why we're seeing this at the minute is because of what's going on in oil markets, right? Oil went higher yesterday. The reason being is because Donald Trump is suggesting that the Strait of Hormuz is owned by the US and that supply is going to get better, blah, blah, blah. But look at the price of oil. It's continued to rise. So since the end of August, really, or the start of August, the market has been pretty bullish oil. That is obviously going to have a knock-on effect. So whenever oil prices rise, it has a knock-on effect on inflation, right? And it has a knock-on effect on interest rate pricing. That there has an impact on FX markets, okay? So in theory, what we're seeing at the moment is the war headlines are kind of taking over again. The fact that there's no deal coming into place, and the fact that Trump is saying there is a deal, but then Iran is saying there is no deal, and then he's coming out and saying, we're going to bomb Oman, that is putting pressure on these oil markets, and oil markets are continuing to rise. So how does that impact currency markets? How does that impact the likes of gold? Well, it'll be negative gold, right? Because if bond yields start rising, and we're seeing this especially on the 10-year. Yesterday, I was expecting a breakout on the 10-year to the upside. We're getting that now. That is negative gold, right? That's not bullish gold, right? That is negative gold. And if we see a continuation of yields move higher and the dollar remains in that little tight range that it's in, then we could see gold prices fall back down to 4,320, or even back to this 4,250 level. Now, in the grand scheme of macro data, I do like gold longs. But at the moment, we're starting to see those headline risks coming in, and that could obviously have an impact on what happens here. The market looks to be making a bit of a double top pattern here on the 4-hour chart. We've come and retested back at this $4,400 level and look to be rejecting. I don't necessarily want to short gold per se, but I don't necessarily want to buy it here either. So I'm waiting for a pullback. I'm waiting for some kind of move down to the $4,250 area for gold. But let's just go back to the FOMC preview, right? If we do see that we see those dissenters come in and they say that actually they're very close to holding rates, that'll be bearish US dollars. If we see more members from the people that hold debating whether they're going to be more hawkish, that would be very positive US dollar. It would be very positive bond yields as well. Okay. And we're seeing the US 10-year rise. We're seeing the 30-year yields rise because it means that they're worried about future growth and inflation, and they're demanding more yield for their money, right? That's what the bond market's doing at the minute, especially on the long end. Short end is trying to price in the Federal Reserve's interest rate expectations. So take that with you into the trading day. Hopefully that makes sense to you. If it doesn't, leave a comment down below with any comments or questions that you have. My name is John, Senior Market Analyst here at Anzo Capital. If you do want to follow what we do on a daily basis, there are some things that you can do. So here is the Anzo Telegram channel. You can scan the QR code there. That'll take you to our Telegram where we do commentary on the news coming up for the US session, key markets information. So yesterday we talked about the 10-year yields breaking out and talked about the potential gold opportunities. And then you can look at some other opportunities as well. Also, if you want to go check out the Anzo website, here's a QR code to do that. Thanks for watching. My name's been John, Senior Market Analyst here at Anzo Capital. That's your markets in 3, and I'll speak to you very soon.